Hello, everyone. Greyson Geiler here. I am the co-founder of Andorra Capital and the manager of the Goldrush Yield Fund. We put a presentation together for you today. We're talking about mitigating the volatility in the silver market. So thanks for joining us. Okay, so before we talk about mitigating the volatility of the silver market, I need to give you a couple disclaimers. Goldrush Yield Fund is a private fund available only to accredited investors. This is not financial advice, and we are going to be using statistics, charts, graphs, that sort of thing. We believe them to be accurate, but are making no such guarantee. So let's start talking about a new strategy for mitigating the volatility in the silver market. Let's start with just the reality that silver is volatile. About twice as volatile as gold. We're talking about 20 to 26 to 30% annually for silver, more like 14 to 15% historically for gold. And industrial demand may be a big part of that, with the economic cycle affecting the demand for silver industrially. Could have something in there. Speculative flows are gonna affect the volatility of silver. It's a much smaller market, so speculators come in when things move further, faster. Limitations on the physical market of silver. The Chinese put limitations on their export licenses. And hey, silver in the last few years has had a big supply-demand mismatch. So there's been a disconnect in prices that are volatile. So coming into 2025, historically, silver's volatile, and it did not disappoint in the last year. So $32 an ounce at the beginning of April of 2025. And here we go, tripling over the next 8 months. But remember, silver had not made a new all-time high since 1980. Gold over the last couple of decades has made many, many new all-time highs. So silver had to catch up, and boy, did it. More than tripling throughout the year, but now just in the last few months, silver has given back about $40 an ounce. So if you're an owner of silver, a longtime owner, you're thinking, why didn't I sell some when the price was over $100 an ounce? Well, maybe you thought it was going to $200 an ounce. Managing the volatility is a difficult thing when you want to hold silver as an asset. Well, silver is back as a capital asset, and that's what we're going to talk about today to help you mitigate some of the volatility. Bullion banks historically would lease and loan their silver out to businesses for a return on their capital. But these transactions were really opaque. Leases turned into loans, got complicated. It was really limited to large market participants. Now, more recently, there's a structured platform that has emerged to facilitate metal-denominated financing. Metal leased and loaned out at an interest rate paid in metal. So this marketplace has enabled a standardized, transparent transaction between depositors and borrowers, lessees, with the interest paid in metal. Silver is a capital asset again. So about a decade now, this private market has been running, and participants include both institutional and individual investors. The businesses getting their capital in terms of ounces rather than dollars, that is growing as well in number and in size. So a good case study here is StoneX. Big Fortune 100 global financial services company. They're focused in the commodity arena. They have a depository in New York that just got registered as a depository for gold and silver futures trading. And so these metal-denominated finance leases and loans, with a company like StoneX, it's facilitating their physical commodity operations. So now there's a direct link between the providers of capital, our fund, individual investors, institutional investors, and then on the other side, in the commodity world, the real world demand for silver and other commodities. So it's an exciting change going on in the marketplace. It allows us to think in ounces rather than dollars. It's an evolution, so to speak, in owning silver and gold. So you can maintain your exposure to the metal don't have to worry about the price volatility as much because we're initiating an income component. You're earning money whether you buy or sell. So the capital is getting deployed to operating businesses that are paying interest in ounces. So the returns on the metal when you're holding it, well, now you've got an accumulation through interest and a compounding over time. So it really reduces your reliance on trying to time the market. Do I want to sell, pay the taxes? When am I going to get back in? You can hold the metals, the monetary metals, over time and accumulate more ounces through interest. So Goldrush Yield Fund, that is what we are doing. Give us a call or an email if you are interested in how we are doing this. We're doing a bunch more of these videos, so be on the lookout for more. Thanks for your time and enjoy the disclaimers.